Hello traders, I welcome you to this video and I especially welcome you back to the Forex Geek channel. If you are new here, don't forget to hit that subscribe button and give this video a like if you find it helpful. In this video, we're just going to be talking about one of the most powerful strategies in trading, and that is the stock breakout strategy. Okay, so basically this technique can give you a major edge when it comes to predicting price movements and knowing when to jump into a trade. All right, so if you have been struggling to spot breakouts or you just want to understand how to use them effectively, then this video is for you. And of course, as the name implies, we're going to be talking about, the breakout strategy on stocks, to be specific. All right, as you can see on my screen, we are talking about, we are discussing the strategy on Apple, which is just a stock. It must not necessarily be the Apple stock. It could be any other stock. All right, the strategy works across different stocks. We're going to be starting with the basics. This strategy is about identifying specific price levels where a stock has the potential to break out. Okay, these key levels are usually support or resistance levels. All right, so you have to mark your levels on your chart, key levels where a stock has the potential to break out. You have to mark out those key levels, levels of reversals, levels of rejections. You have to mark those levels on your chart. You can see here. All right, because these levels are going to guide you as you practicalize this strategy. Okay, so these levels imply that the stock has been either bouncing off a certain price point or failing to break through that price point for a while. Now, when the price finally pushes through these levels, that is when the breakout happens. You can see what happened here, right? We had a breakout from this key level to the downside. Now, one of the things that validates a breakout is retest, right? Now, in as much as we had the price climb back above the breakout zone, but eventually it got rejected again around here, and another breakout happened, sending it down all the way to this support. All right, so usually when a breakout happens, there is a tendency for price to continue in the direction of that breakout so long as the momentum is strong. So when the breakout happens, you will now be looking for opportunity to enter a trade in the direction of the breakout. Now note that breakout can happen in any direction. All right, if the price breaks above a resistance, okay, let's try and find such an example. Okay, we can see that here we had a resistance here. Can you see the rejection? You can see that there was a rejection here and here, right? So price finally broke above this resistance, and you can see the momentum, how the bulls pushed the price all the way up to this other resistance. And remember that when a resistance is broken, it turns into a support. So you can see that the next time price retested this zone, it got rejected because this has now turned into a support, and price climbed back up and broke above this resistance. You can see when price broke above this resistance, it went up, and then after price got rejected at this point, it came again, broke above this resistance and went up again. So basically this breakout strategy involves watching out for a breakout and taking an opportunity when a breakout happens on a stock. All right, so basically if price breaks above resistance, it's considered a bullish breakout. And if price falls or breaks below a support, it's called a bearish breakout. All right, but here's the important part: not every breakout is the same. All right, some breakouts lead to strong trends, while others might fizzle out and reverse quickly. So how do we spot these breakout points? Well, the first thing to look for is a stock that has been trading within a range for a while. Remember that for a breakout to happen, there has to be a range, right? Or there has to be a sort of, movements within a specified boundary, well, which is a range. Like you can see what happened here. You can see that price was ranging within this zone, right? And then finally a breakout happened to the upside. And then now, in the case of this bearish breakout, you can see that price was actually ranging within a triangle. Remember that consolidation can also happen within a triangle. So you can see that price was ranging within this triangle. Can you see that? This ascending triangle. Can you see? Then a breakout happens, sending price down all the way to this point. Right? So first of all, identify a consolidation. Once you have identified the consolidation, then you'll be looking out for a breakout to either direction. All right? So when the stock finally breaks above resistance or below support, that is when we look for confirmation that the breakout is real. One of the key factors to consider when looking for a breakout is volume. Okay? A breakout without volume is often a sign of a false move. For breakouts to be reliable, we need to see a significant increase in trading volume. This is a sign that there is real market interest in the move, which increases the chances that the breakout will continue in the direction of the trend. So for that purpose, we can take advantage of the volume indicator, and we're going to look at what happened during the time of that breakout. So can you see that when this breakout occurred, there was a little increase in volume. Now, the volume might not be the spike, might not really be a very large spike, but just ensure that there is a significant increase, at least something notable, something that is observable, something you can see. You can see that the volumes, the level of the volumes on the background are small compared to this increase that took place at the time of this breakout. You can see that there was a notable increase. There's a difference if you look at it closely, right? So ensure that there is an increase in volume when the breakout happens, all right? Timing also plays a big role here. Breakouts that happen during key market sessions, like the opening of the New York session or after major news events, tend to have more momentum. So always keep an eye on the timing of your trades to catch those big moves. Now, not all breakouts are successful, okay? One of the biggest risks when trading breakouts is the potential for false breakouts. This happens when the price briefly breaks through a key level, but then quickly reverses back inside the range. Let's just see if we can find such an example. Okay, this is an example. You can see that we had a range here, right? Price was ranging. Price was getting rejected around this support level, right? That's the reason why when you are using support and resistance, take note that it is a zone. You can see there was a breakout to the downside. There was a breakout, but this was a false breakout because suddenly price reversed back into the breakout, and in fact, there was a notable upside. This was a significant buy. So this was likely a liquidity sweep. It's possible that this was just a stop hunt because as price broke below this support, those that set their stop loss here would have been stopped out. And then as liquidity was grabbed, you'll notice that price eventually reversed back to the upside. So we had a false breakout around here. This is an example of a false breakout. So to improve the accuracy of your breakouts, you can actually combine this strategy with other technical indicators. All right, you can use moving averages, trend lines, oscillators. They can all help you confirm the breakout strength and direction. For example, let us say we are using RSI for confirmation. Let's say we are using RSI for confirmation. If the price should break above resistance, all right, okay, let's use this. If the price should break above resistance and the RSI is showing bullish momentum, like what was happening around here, that's a strong confirmation that the breakout is likely to continue. Okay, so using these tools together will give you more confidence in your trades and increase your chances of success. To sum it up, the stock breakout strategy can be a game changer when it comes to trading. By identifying key price levels, waiting for volume confirmation, and avoiding false breakouts, you can improve your chances of spotting high reward trades. Just remember to manage your risk and stay disciplined. If you enjoyed this video and learned something new, be sure to hit the like button and subscribe to the channel for more trading strategies and tips. Drop any questions you have about the stock breakout strategy in the comments below. I'd love to hear from you. Thank you for watching, and I look forward to seeing you in the next video. Happy trading.